Welcome to our Solo 401k and Self-Directed IRA Q&A session. My name is Natalie with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. Today, I'm joined with Dmitriy Fomichenko. He will be the one who will be answering all the questions. Dmitry is the founder and president of Sense Financial Services. He began his career in financial planning and real estate investing in 2000. He owns multiple investment properties in various states and is a licensed California real estate broker. Dmitry holds a designation of Certified IRA Services Professional from the American Bankers Association, and over the years he's taught hundreds of investment and financial planning seminars and has mentored thousands of investors. Thank you, Dmitry, for joining us, taking the time to answer the questions during the session.
Natalie, thanks for being here with me. Looking forward, as always. We have some great questions pre-submitted, and if you guys can think of any additional questions, go ahead and submit them in live chat option.
Okay, we'll jump right in. First question is from Chi, and he's asking how to set up a solo 401k, legal, tax, and other areas to ensure compliance.
Great question, Chi. Well, to set up a solo 401k, you have to contact our office first. That is our expertise. That's what we specialize in. Our team is trained to do that, and we have the plan documents for you that are being pre-approved by the IRS. So you contact our office, you submit the application, and then our team will create the plan documents for you. And not only that, we will be responsible as a document provider to maintain the plan documents updated with the IRS to ensure IRS compliance.
Okay, next question is from Kareem. I would like to know more about how to grow my solo 401k using my real estate brokerage and general construction businesses.
Another good question, Kareem. So if you own a business which is required to establish a solo 401k plan, you have to have a sponsor for the solo 401k plan. That can be a business that you own or self-employment. If you're self-employed, note that if you have employees working for you, you will not be eligible for solo 401k. You can have part-time employees, but not full-time employees. And once you have the business in place, then business can adopt a solo 401k, and you can contribute to the 401k from the business earnings, from the business income. But you cannot use your real estate brokerage or construction business to actually grow your 401k other than the contributions, because yourself, your immediate family members, and your businesses that you own considered disqualified entities. So your 401k is actually prohibited from engaging in any transaction with disqualified person, and that includes any businesses that you own. So you can use your solo 401k to grow and make the investments, but you cannot interact with any existing businesses that you or immediate family members own.
Okay, next question is from Annie. How to determine value of 401k funds invested into a LLC as passive investors to convert to Roth 401k. The LLC is one of the investors in a commercial real estate building.
Good question, Annie. Roth conversion is a great strategy. There is better ways to do it, certain ways that will produce a better outcome for you. But for this particular scenario, if you wish to convert a portion of the interest that your 401k owns in a commercial property, then you will have to get an appraisal, because Roth conversion is a taxable event, and you need to determine the taxable amount. And the only way you can determine that for a real estate property is by conducting an appraisal. Once you conduct an appraisal, then your portion that you're converting, whatever the percentage is, will be taxable amount. You can complete the Roth conversion form, and then that portion will be owned by your Roth 401k from that point forward.
Okay, next question is from Daniel. Are rules going to be changed about converting from Roth IRA to Roth Solo 401k?
Well, actually, there is no rules that are allowing that. Currently, you're not allowed to convert Roth IRA to Roth Solo 401k. There has been talk, there's been a proposal, but nothing changed so far. And I don't have any indication that that might change. So as of right now, this is not an option.
Next question is from Lewis. How easy is it to take a 401k and roll it over? Is there any tax or financial penalty to do it?
Well, the question is a bit unclear which 401k you're talking about. If you're talking about a 401k with your current employer and you're under retirement age, most likely you will not be able to roll that over anywhere. There are restrictions because it's a plan with the current employer, and there might be a portion that you will be allowed to roll over. Such as contributions made by your employer. So if there is certain time passed, those amounts will be considered vested and you will be allowed to move those amounts. But your contributions typically, they're locked in until you either leave the employer or reach a retirement age. So the really the accurate way to find that out is to contact your employer HR department or just call the toll-free number and the statement for your 401k and ask the representative if you can do, and this is the key word here, is in-service distribution. Can you do in-service distribution? And if the answer is yes, then yes, you can potentially move portion of the 401k out.
Okay, next question here is from Eric. I have a Roth IRA. I may be taking distributions in the coming years. My understanding is that the entirety of the distribution will be free of income taxes for me in California. However, in the back of my mind, I have a memory of needing to report two separate portions of the distribution, one on the 1040 form. One portion will be the untaxed portion representing the part that was originally put into the Roth IRA and had been already taxed. The other portion being distributed would come from the growth of the Roth account and would be taxed as income the year it is distributed. What is correct regarding the taxation of the Roth IRA distributions? I'm 72 this year.
Eric, good question. And this is a good question for your CPA, actually. It's a tax question. And just as a reminder, we are not tax professionals here. We can give you just a general guidance here, but this is a tax question, so you gotta discuss this with your CPA. But generally speaking, if you have a Roth IRA and you had it for more than 5 years and you're over retirement age, which is over 59 and a half, and you are 72, so you certainly meet that, and assuming that you had this Roth IRA open for 5 years, then all of the distributions should be tax-free. There is going to be no distinction between the contributions you made or the earnings. This is when you do premature distribution that will apply. But again, in your case, all of the distributions should be tax-free, but you do want to confirm that with your CPA.
Okay, this question is from Kevin. Is it possible to roll funds from an active Roth 401k into a self-directed Roth IRA? By active, I mean that I'm employed by a company and currently contributing to the Roth 401k via payroll deductions.
Kevin, that's a similar question to the one answered just recently. If you are employed by the company and you're under retirement age, and you're currently contributing to that Roth 401k, most likely you will not be able to move any of those funds out. But you do want to confirm with your plan administrator. So again, the accurate way to find out the answer is contact your 401k plan administrator and ask them a question if you can do in-service distribution for any portion of your 401k.
Okay. We are about halfway through the pre-submitted questions, so Those of you on here, if you do have additional questions, just want to encourage you to type those up in the live stream chat. But our next question is from Joseph. I understand that the self-directed 401k is set up as follows. Adoption agreement of an IRS approved plan supported by a trust. Is this the way a self-directed 401k plan is structured?
Yes, so you do need an adoption agreement plus several of additional plan documents, plus you need the IRS determination letter stating that the plan meets the criteria of the qualified plan with the IRS, and all of that is handled by our team. So if you're ready to get the process started and establishing your solo 401k, contact our office, schedule complimentary consultation with one of our experts who can answer your questions and focus on your specific situation. And then our team will establish the qualified and IRS approved plan for you. And you'll get all the IRS approved plan documents, including adoption agreement and the rest.
This question is from Jody. How can we roll our Roth into our 401k Roth?
Again, a little bit unclear. I'm going to assume when you say Roth, you mean Roth IRA. So if you have a Roth IRA and you have a solo 401k with the Roth sub-account, unfortunately, IRS rules currently do not allow Roth IRA to go into a solo 401k Roth sub-account. So there is no way to do that right now. That might change in the future, but as of right now, you're out of luck.
A question from Bob. If I convert a traditional IRA to Roth IRA, I would like to know if the years of the traditional IRA was in place to go towards the minimum, the 5-year minimum a Roth has to be in place.
The traditional IRA, the funds that have been held in the traditional IRA do not count towards the Roth IRA. So it's the Roth IRA that counts. So again, unfortunately, that's not going to work for you. You can't use the years that funds been in traditional IRA towards the 5-year count for a Roth.
Okay, question from Rama. How can I transfer an existing solo 401k?
Transfer where? Again, a little bit, not a complete question. If you have a solo 401k and you want to transfer it elsewhere, yeah, that's possible. Do you wish to keep that 401k alive? Or do you want to terminate that plan? So, and that's really the question. Because if you wish to keep the plan alive and you just want to transfer the portion out, typically that doesn't make sense, because solo 401k is the most powerful. It gives you the most flexibility. So moving from that solo 401k to perhaps to a traditional IRA, you'll be downgrading. You actually be limiting yourself. So that typically doesn't make sense. But if you're terminating 401k, then yes, you can move the entire. In fact, you will be required to move everything out to a traditional IRA or perhaps Roth IRA if you have Roth funds.
Next question is from Katie. I would like to know more information on withdrawing from 401k self-directed accounts.
Again, similar question to a previous one. Actually, no, that's the one previously was about transfer. So here, Katie is asking about withdrawing. So if you reach a retirement age, then you can start taking distributions from your 401k plan. If you have a 401k with the employer, obviously the plan administrator will assist you with that. If you're referring to a solo 401k plan, we do have a great guide on taking distributions. You can access that by logging into the client portal, Solo 401k client portal, going to the knowledge base and just searching for distributions. And then you'll get the guide there. You will be required to withhold 20% taxes on the distribution, and you will be required to report the distribution using Form 1099. We do have detailed guidance on each one of the steps, and your resources the client portal. And if you need any additional guidance, our experts are here to help you. Reach out to our office and we will guide you.
Next question is from Zainab. Can one combine multiple types of 401k accounts into one self-directed IRA with checkbook control?
When you mean or when you ask multiple types of 401k accounts, I'm not sure what you're referring to, but I'm assuming it's a traditional and a Roth. So if you have a traditional pre-tax money in your 401k and you have Roth funds in your 401k plan, then those cannot be combined because the traditional, those are pre-tax, Roth, those are post-tax funds. You've been taxed on those funds, and unfortunately you cannot combine those with the pre-tax money. So if you want to keep them as is in those separate buckets, then you will need to establish a self-directed IRA for traditional funds, and then you will need to establish another self-directed Roth IRA for the Roth funds. The only way to combine them is to take the pre-tax funds and convert them to a Roth. This is, we're talking about IRA. Now, if you're eligible for solo 401k plan, you actually can take the funds, both pre-tax and Roth from your 401k at your past employer, and you can move them in kind, meaning you're going to get two checks, one for traditional, one for Roth, and you can move those into a solo 401k, because every solo 401k plan that we establish does come with the Roth sub-account, so you can have Roth funds in addition to pre-tax funds.
Okay, a question from Christine. I have 5 accounts under my solo 401k plan. Can you walk through how to invest in one deal with that money?
Yeah, good question. The reason Christine might have 5 different accounts, because there might be rollover funds, they might be pre-tax funds that you made contributions. You also might have Roth funds that you made, and you might have the same for your spouse. So that's what the multiple accounts are. And you, as the plan administrator, are required to keep track of those different types of funds within your solo 401k plan. But for simplicity, I'm just going to use 2 accounts. Let's say you have 100,000 combined, and you have 50,000 in a Roth, and you have 50,000 in traditional. But the concept is the same, whether you have 2 accounts or 5 accounts. And now let's say you want to make an investment, $100,000. You want to buy a rental property. So what we do recommend is that you open an operating account for that investment. And that's simple. You can just open a new account. You can nickname it operating account. And then you will transfer 50,000 from traditional, 50,000 from a Roth. Now you have $100,000 in this operating account, and you're going to make that particular investment. Now, when investment pays the returns, the rental property will produce rental income. It will go to that operating account, and you don't have to split every single rent check because it goes to the operating account. And then the same operating account will be used to pay all the expenses, the mortgage payments if you have any, property taxes, insurance. So this way you have one operating account, it's 50-50 or whatever the split is, and that makes it easier from the accounting standpoint. So that's the best way to pull funds together from multiple accounts to make a single investment.
Okay, those were all the pre-submitted questions. We'll go ahead and move over to the questions submitted in the live stream chat. First one here is from Dana. I set up a safeguard self-directed Roth IRA. Are my fees changing? Do I need to register? Or do you already know me from Safeguard?
Uh, Dana, thanks for the question. We actually sent you several emails to all the clients that are switching over. You do need to complete an onboarding process. Your fees remain the same, but you need to complete onboarding form. So look for that email. You can also access that on our website under FAQ page. We send the link to that, or just contact our office and one of our friendly representatives will help you with the process.
Question from Gabriella. Is there a form to fill out for a rental property expenses?
There is no form to fill out for rental property expenses. You just need to track them because those expenses, they're not reportable, but as the plan administrator, you need to track all the income and expenses. So whatever software you like to use, it can be something as simple as Excel spreadsheet, or you can use Quicken or QuickBooks, whatever it is that you prefer to use. So you want to track all of the income and expenses for that particular rental property or any other investment that you have inside of your self-directed retirement account.
Okay, we do have a couple more questions here. If there are additional questions, please use this time to type up those in the live stream chat. This one is from Brian. We did answer earlier. He's asking, can a Roth 401k be converted to Roth IRA easily? Anything you wanted to add there, Dmitry?
Yeah, so if you have a Roth 401k cannot be converted to Roth IRA, the proper term will be rolled over. So yes, potentially you can take a Roth 401k and you can roll that over to a Roth IRA. In the past, it was an option for those who've been trying to avoid the RMD, but that's been changed a few years ago. There is no RMD now on the Roth 401k fund, so there's really no reason for you to do that because you'd be basically downgrading, because Solo 401k is much more powerful than an IRA. But every situation is different, so if there is a reason that you think you do need to make that rollover, feel free to reach out. I can speak with you personally. We can brainstorm and decide if that's the right move for you.
Okay, a question from Katie. Can a solo 401k distribution be reported annually, or does it have to be quarterly?
The distributions from the Solo 401k are reported annually, so there is no quarterly distributions. It's just one single reporting that you will submit at the end of the year, or actually in the beginning of the year for the past year, reporting that. Now, when you take in distribution, you might be taking multiple distributions during the year. Let's say you do one quarterly, you take in a quarterly or monthly distribution even. When you do take a distribution, you're required to report withheld 20% taxes. So you'd be doing that each time you take a distribution. But then in the beginning of the year, you will be required to issue Form 1099-R because distributions are reportable. And as the plan administrator, you're required to submit report to the IRS for the distributions that you took out during the year. And that 1099-R will have all of the distributions combined. Again, if taxes were withheld, it will be indicated on the 1099-R, which will then be given to your CPA, who will report that on your tax return.
Question from Eric. He did submit a question during registration, but he was out of cell range out of that time. He had the question about the taxation on Roth distribution. Is the entire annual distribution tax-free?
Oh, yes, Eric. If you are over age 59 and a half and you had your Roth IRA for over 5 years, then entire distribution should be tax free from your Roth IRA. But we do want to direct you to your CPA. You want to confirm that with your CPA because we are not tax advisors here. We can only give you general guidance, but it will be wise for you to check with your CPA.
Okay. Looks like those are all of the questions at the moment. Should we wait a little bit longer, see if any additional questions come through?
Sure. Yes. Thank you, all of you guys, for joining us. This is your last call to submit questions. So we have a couple more minutes for you to take advantage of this opportunity. And if not, then we'll go ahead and conclude this session, and we'll see you next time during our live Q&A. When is it scheduled for next one? Natalie, if you can announce that.
Yes, let me look it up really quickly.
And just as a note here, we now live stream the Q&A session and all of our live events on Facebook, on LinkedIn, and also on YouTube. So this is a great way for you to make sure that you are subscribed to our YouTube channel so that you can get notification, and make sure that you're connected with me on LinkedIn and on Facebook.
Our next Q&A is scheduled for Monday, July 7th, so we'd love everyone to join us and ask their questions. But we did actually have a question come in through from Emily. Can you explain how AGI to, I'm not sure what that is, but how AGI to Maggie is calculated? I'm closer to and often over the limit to contribute to Roth IRA. I want to know if there is another way I can participate.
So I think AGI, Emily is referring to adjusted gross income, and AGI is, I believe, modified adjusted gross income. So the IRA contributions are based on your income. So if you are over a certain income threshold, then you may not be able to make tax deductible contributions. Now, you always can make contributions to an IRA. Just if you're over income threshold, those contributions will not be tax deductible. Now, typically, it doesn't make sense for you to make non-deductible contributions and keep them in a traditional IRA. So in this case, Emily, if you are in this situation, you should consider using a backdoor Roth IRA strategy where you can make non-deductible contribution to a traditional IRA, and then you can immediately convert those into Roth. Now, because they've been non-deductible, the conversion will not be a taxable event. So now you have contributions that you made to a traditional IRA and didn't get a deduction for those. You're funneling them into a Roth IRA. And Roth IRA is tax-free vehicle, so you can grow those contributions tax-free from that point on. So that's the strategy that you might want to consider. But as far as calculations, that's something, again, that you got to discuss with your CPA. I'm not going to be able to help you as far as your modified adjusted gross income calculation. That's something that your CPA can help you with. But good question.
Okay, question from Gabriella. What is the process to sell a rental property to start taking distribution?
Gabriella, I'm assuming that you have a rental property inside of your self-directed retirement account. So if that is the case, you don't have to sell the property to take distribution. And the key here, when I consult with clients, I always tell them you have to plan for this. The key is to plan for this in advance. Because if you reach RMD or required minimum distribution age, and you will be then required to take a distribution. And if you have a property and there is no cash and the property doesn't produce enough income, you'll be stuck. And it's going to be a tough situation because you won't be able to pull a portion of the property. Like you can take a garage door out as a distribution from your self-directed IRA. Now you can do a distribution in kind for a portion of the property, but that is confusing, and you may not want to go that route. But ideally, you want to accumulate enough assets inside of your self-directed retirement account that produce enough passive income that will satisfy the RMD. But if you decided to to sell the property so that you can start taking distribution in cash, then you just it's pretty straightforward. You find an agent who's going to list the property for you, and you go through the process of listing that, selling it, and then the proceeds will go back to your self-directed IRA or self-directed solo 401k plan, and then you can take the distribution.
Okay, question from Bob. If I convert a IRA to a Roth, do you have to wait 5 years to take a tax-free distribution?
Correct, Bob. Yes. So the requirements for tax-free distributions will be that you need to be at retirement age and have that IRA for 5 years. So yes, the 5-year clock will need to be start ticking before you can take that tax-free distribution.
Okay, question from Emily. I believe it possibly is a follow-up from her previous question. She's asking, would I make the conversion monthly, quarterly, or annually?
If you're talking about Roth conversion, it doesn't make sense to do it monthly or quarterly. Yeah, you probably want to do it just once a year. The beauty of the Roth conversion is that you can make those Roth conversions annually. So you don't have to convert, let's say, even if you have a property, you can do partial conversion. So if you have a property that you want to get into Roth eventually, you can do that. You can take 20% of the property, convert it to Roth this year, and then you can take another 20% converted to Roth next year. Now it becomes a little bit tricky because you have to track all of this income and expenses for the property, because now 20% of the property is owned by the Roth, and then next year 40% owned by the Roth. So you have to have a good accounting system in place, but it is certainly possible. And it might be a good idea depending on your situation.
All right, looks like those were all the questions for today. If additional questions come up, please reach out to our office. We'd be more than happy to set up a time for you to speak with one of our experts so that they can answer those questions and discuss your specific situation. But thank you again, everyone, for joining. We do look forward to you joining our future events.
Thank you, Natalie, for being with me, and thank you all for joining and for great questions.